television's program. Our focus on the program is to review and discuss issues around the diaspora community in the UK. The program offers you that unrestricted voice on issues affecting you in the UK. Join us live every Monday at 10 a.m. to 12 noon. As part of our continued efforts to reach the African and other ethnic communities in the United Kingdom with greater impacts and create the platform to hear your silent and unheard views in this hugely growing community in the United Kingdom, our channel, Ben TV, presents to you another live current affairs television program. Our focus on the program is to review and discuss issues around the diaspora community in the UK. The program offers you that unrestricted voice on issues affecting you in the UK. Join us live every Monday at 10 a.m. to 12 noon. Good morning and thank you for being part of the program. The program is Dialogue1 Diaspora, your breakfast tonic show, where we bring to you issues around the world from Africa, UK, and of course the US, and issues around Europe. And of course on this show we'll talk about different sectors: economy, politics, even legal matters. We talk about everything that should and everything that does have impact on the diaspora community, the African Caribbean diaspora community in the United Kingdom. My name is Tunde Alabi and this is Ben Television. Welcome to the program Dialogue1 Diaspora. This morning we'll be talking about sometime next month, Prime Minister Theresa May will be triggering Article 50 of the Lisbon Treaty, which will kickstart the process of Britain leaving the European Union. So many things, especially on the economic side, has been happening, and a lot of uncertainty have been discussed and, of course, been talked about. The future of Britain's economy has been said to be in question, while some have said, look, the best thing that will ever happen to Britain is Britain having access to a global market, having access to a free world, and not being encumbered by the tricks and of course the rules governing trade and investment in the European Union. What does the market and of course the economy look like for Britain post Brexit, as soon as Article 50 is triggered sometime next month? Joining me on the program today is a gentleman who has been involved on forecasting economic and financial matter across Europe and of course in the UK. His special interest is on economic issues on African and Britain. He is the director of an organization that is called
I'm the director of Developed Africa.
Oh yeah, Developed Africa. Too many things on my head. You're welcome to the program. That is Sam Foxman for you, the director of Developed Africa. It's an organization that is involved in promoting and encouraging investment from UK, Europe to Africa. And so he will be telling us from his practical experience as an investment-driven manager what challenges Britain will be having, and of course Africa will be having when it does come to the issue of Britain leaving the European Union. And also in the course of the program we'll be discussing housing matters. Of course today in Britain, especially for people who live in London, the issue of housing crisis is no longer news. One of the toughest problems people face in today's Britain, especially in London, is the issue of housing. Of course, people in that sector have said this is about the best time anybody can ever invest and of course acquire property in today's Britain. And so we'll be talking about one man who has taken the drive to invest in this sector, has made money, is making money, is teaching people how to make money, even in this very tough season when there is huge housing crisis in Britain. He's a man who, for the first time, a black man running a high street housing agency and expanding greatly with a multi-million pounds portfolio in the housing sector. And of course, will be telling us the opportunities we can get in the housing sector if we do invest in that sector, despite the crisis and the challenges in that sector. And also, we'll be talking about your health and finances in the course of this program. We'll also, at some point, we'll go to Africa, Nigeria, indeed, where we'll take a look at issues, how people can live above recession. My guest at that point is going to be a gentle lady who will be telling us how we can live above recession in Africa and indeed Nigeria. And at some point, if you have the pleasure, we might be hosting a traditional dollar at some point in the course of this program. Thank you. This is what we're going to offer you. It's going to be very interesting. The next 2 hours, just take your seat, have a cup of coffee or tea, and enjoy the show. Again, my name is Tunde Alabi, and this is Dialogue1 Sam. My guest today, Sam Foxman, Director, Developed Africa. Sam, thank you for joining us on the program today.
Thanks for having me.
Can I first, your organization is involved in attracting investment from across Europe to the United Kingdom, and of course attracting investment from the United Kingdom to Africa and vice versa. What challenges, what are the challenges you see now with Brexit?
In terms of attracting investment.
Investment.
I think it's a great opportunity for us, as is the election of President Trump. I think both of these things happening at the same time are a great opportunity for other countries, and obviously my particular interest is in African countries, but other countries all around the world, to take advantage of the fact that that markets are that US markets and British markets maybe aren't such a sound place to put their money at the moment, with the future uncertainty, because it's almost certain that there will be, even though everyone knows, or at least almost everyone believes, that the triggering of Article 50 is a certainty, and even though everyone knows that once Article 50 is triggered we will leave the European Union, the markets don't necessarily behave in that way, and so they won't completely have factored it. Although there's an element of factoring in those decisions in terms of driving, for example, the price of sterling down and keeping the markets a bit depressed. The day that Article 50 is triggered, and then after that, the day 2 years later when we leave the EU, they will hurt the pound, they will hurt the markets, because that's how investors and markets behave. It does create...
The pound is already taking a hit now.
the pound has already taken quite a substantial hit, and that obviously creates, in terms of our particular focus being on driving British investment into African countries, the pound taking a hit obviously means that's a bit of a problem for us, because it means that, you know, for every pound you have, that goes less far in South Africa or Nigeria or wherever it is, whatever jurisdiction you're operating in, your pound now buys you less. But I think that effect is... That
is where the money of the African country is strong.
Well, the
cedis in Ghana is relatively stable, while the Naira in Nigeria has taken a hit. Sure. At its lowest ebb so far in recent time, while some other African countries, say Equatorial Guinea, say South Africa, their currency is strong. So maybe like 3-4 years ago, what the pound would buy in South Africa now will probably be lesser now.
Well, exactly, and so there are obviously differences across African countries.
Yes,
you mentioned Nigeria. Obviously, Zimbabwe is not known for its currency stability. There are weak African currencies, certainly, but there hasn't been a weaker pound for quite a long time. I mean, Nigeria's got a whole load of relatively new problems, but Zimbabwe, for example, has always had a currency that's enormously weird in terms of the way that it behaves. And so whether you're investing in South Africa or whether you're looking to invest in Zimbabwe or wherever it is you're looking to invest, there hasn't been a time when the pound's been weaker, and so it's been, in that sense, worse to do that. On the other hand, consistently for the last decade or so, African investments have, like a diversified portfolio of African investments would outperform an equivalent portfolio in European or American markets, particularly European markets. And those markets are slowing down even further. And African markets, investment markets, remain quite buoyant. So there is a sense in which, despite the fact that the pound now gets you less, the extra growth that you get in those markets makes it worthwhile to get on board with that. And also, a lot of, when you're dealing with large institutions, the currency consideration isn't that important because they'll hold a large number of assets already in dollars or in whatever else, in euros.
Well, but what about with the British economy itself in terms of its business transaction across Europe? Say you are an African with some investment in London, you say in the UK, and you rely on European transactions to grow your business in the UK. What is the future like with Brexit?
Well, I think if your business is specifically European and it deals a lot either in importing or exporting from and with
Other
Europe,
European country.
any other European country, I think there are a lot of potential risks associated with Brexit, because obviously at the moment the terms of the trade deal that we have in effect with the European Union are that anything can be traded any amount, but you know, you might see when tariffs obviously impose extra costs and other things, will have a deleterious effect. In the very short term, it's potentially quite good, because for the next 2 years at least, well, for the next 2 years and 3 months, or 2 years and 2 months, we will continue to have the same trading relationship with the European Union, and the pound will continue to be relatively undervalued versus the euro. Unless there's another euro crisis, which isn't impossible. But assuming that current conditions hold, it's good for businesses that are exporting, bad for businesses that are importing from Europe, but good for businesses that are exporting to it. In the long term, it's really a question of how good the deal that's done ends up being, and also a question of what the future of the European project looks like, because obviously there are some fairly significant risks to it, with elections in France and Holland and next year in Germany. So there are lots of
uncertainty across Europe.
Enormous amount of uncertainty, an enormous amount that might change the way that the European Union thinks and behaves. So it's perfect. It's not completely outside the realm of possibility. Well, some people have argued that it's not completely outside the realm of possibility that in 3 years' time the European Union simply won't exist. But I think that's a bit of a stretch. But it's not completely impossible that if the European Union decides, well, instead of trying to bring everyone together under these very rigid set of fixed rules and legislate for people and think that we can do everything, in the words of Jean-Claude Juncker, instead that they should leave more to the national governments. So it's possible that within that framework, Britain can trade with Europe and have the open trade that it has now with Europe without giving up the other things that the people who voted to leave wanted to keep.
But of the European Union has said, if Britain will have access to a single market, all other core foundation of the European Union must be respected. Free access of people, freedom of movement, goods and services.
No, I agree, and that's their current position. All I'm saying is it's not outside the realm of possibility that their current position might change as the political reality in Europe changes.
Should Britain go the hard way? I mean, hard Brexit, okay? No freedom of movement, all right, no access to the single market.
It's very difficult because
what
put my cards on the table. I voted for the Remain side. I supported the idea of remaining in the European Union. So my sympathies are obviously with the softer kind of Brexit, but I don't I don't think that that is realistic or possible politically. It was made clear, I think, during the referendum campaign that the biggest issues that people had when they were voting, and we've moved on from economics and we're getting into the politics of this, but it was clear that the issues that people had when they were voting were that they were worried about migration, and they were worried about their jobs, and they were worried about things like that. And they were also worried about sovereignty. That's another major concern. And I think that your point exactly is that the European Union have said you cannot have free trade without free movement. Okay, but if that's true, then we can't have free trade, because the people really, we know that a large number of people who voted for us to leave were voting because they wanted to see restrictions on free movement. That's not to say that there couldn't be some kind of hybrid deal done where there are concessions. You know, one of the things that there's been a lot of talk about doing a free trade deal with India. And one of the things that that the Indian side want as a condition of a free trade deal is easier access to visas for Indians. And so there's no reason that some sort of deal couldn't be done in that space with the European Union. But if the European Union is saying you do not get free trade unless you accept free movement, then I don't think free trade or free movement can happen.
What will happen if that happens? How much will that help British businesses and investment?
That's really a question of what other business it can do. So if a beneficial deal is struck with enough places, then and sufficiently economically important places, like, you know, get the US, Australia's talked about doing a deal, India's talked about doing a deal. See if these kind of deals can be done. If enough of them can be done, then on a kind of macroeconomic level, there's no reason it has to be that painful. It will be a bit painful, sort of unavoidably. On a microeconomic level, any business that deals primarily with, especially any physical trade with Europe, so anything to do with, you know, any supply chain kind of businesses, or anything of that sort, or indeed anything that is involved in a lot of European financial business, I think is going to come on and not involved in more broad global financial markets. I think they're going to come under a lot of pressure, under quite a tight squeeze individually. But there's no reason that has to feed out into the wider economy.
Will the current relationship Britain has with Africa change in terms of investment and economy?
I would hope,
Brexit?
Obviously, that this is an opportunity for Britain with Africa, with Asian countries, with the whole world. I think the idea of a global opportunity is quite a seductive one. I'm not sure how realistic or how realizable it is as an aspiration. It depends really on what the other sides of the side of the negotiating table wants in exchange for whatever it is that's being offered.
I mean, with Brexit, some people in Africa actually felt very optimistic that Britain will now look towards Africa. I mean, the last 10, 15 years, British investment in Africa has considerably reduced, while China has taken advantage of every opportunity. Do you see Britain changing its mind in terms of?
Well, part of the phenomenon that you're talking about is that
looking towards Africa, especially.
Sure, but part of the thing about like reduced investment in Africa is that equity investment from all Western countries, and particularly from Britain, has reduced enormously in all markets. So there are a number of reasons for this. Partly the financial crisis in itself had a lot of, meant that people had to be very, very cautious about their money. They had to keep much larger capital reserves. But the other thing, the other phenomenon that explains this is that, if you're if what you're looking for is a steady, reliable source of income from an investment, the bond market is the place where everyone is now. It's not so much in equities. So that explains part of the fall. And obviously China, which has enormous capital reserves, or had enormous capital reserves, it now has a lot of debt, but had enormous capital reserves, was in a position of being able to fill that gap and make up that deficit. And obviously, that's had a certain effect for a lot of places. But in terms of Britain and African countries, I think particularly with English-speaking African countries, I don't see why that seems like a great opportunity.
But it does seem, even in terms of policy orientation, Britain has not shown any interest so far. I mean, even in the days of Cameron, David Cameron as a prime minister, he hardly visited any African country. Now, Prime Minister Theresa May had visited a couple of countries, had talk with India, China, in fact had visa deals with these two countries, special visa agreement with China, and it does seem nothing is being done towards any African country at all.
Well, I think that's a fair reflection of where we are now in like the Brexit timeline. India is obviously India, China, the United States. These are enormous economies, bigger than the largest African economies by some way. And so I think the idea of trying to nail down, what Theresa May wants to do is she wants to be able to negotiate from a position of strength. And that means being able to go, look, well, we've already got something agreed with the US and Canada and India and China. We've got those agreements in principle. That's our position of strength. It would be a much less significant position of strength if she went there and said, well, look, we've got Sierra Leone, we've got the Gambia, we've got, these small African states. I don't think, obviously Nigeria, South Africa, these are big hitters, but but they're still not in the India, China, United States sort of G8 kind of tier or G20 kind of tier of nations. So I think that's the reason that you wouldn't do it immediately. I also think that dealing with a lot of African countries is a very difficult thing for a lot of British politicians to do, because there is a kind of, there's a struggle with understanding what Britain's relationship with those countries should or can be because of the sort of colonial history and things like that. There's a kind of awkwardness that I think affects particularly the right-wing British prime ministers, British political actors. I think it's difficult for them to go over there and say, we should have a trade deal because once upon a time you were one of our colonies. I mean, it's a backwards way of thinking about the world. And so it's difficult for them. It's difficult for them, I think it's difficult for a lot of British voters and especially politicians to really understand what Britain's role in the world should be after Brexit. And I think finding a role, an economic role with these African countries, with Africa broadly, is a really valuable thing for it to think about doing. One of the things that I think the last government got wrong is that the last government committed to spending 0.7% of its GDP in foreign aid. And governments here, governments overseas, are enormously inefficient in terms of how they allocate resources. They don't really know how to effectively do that. The free market provides a framework for allocating resources that is essentially quite good at doing it. And the original report that was produced, which the Prime Minister thought he was following when he said he wanted to commit to spend 0.7% of GDP on foreign aid, actually said what you need to do is you need to have 0.7% of your GDP going to less developed countries in capital transfers. Half of this should be foreign aid. The other half should be business investment. And that was never followed through on. That was never really incorporated in policy. And so there hasn't been what I think would be a very good policy focus of encouraging investment into African countries, into South Asia and into Latin America, because those markets are providing excellent returns on the whole. And most importantly, it is the best way for both Britain and, for example, Nigeria to have a strong, positive relationship in the future, to have that economic link and then to establish a kind of political friendship.
Mm-hmm. Okay, quickly, so for those of us in Britain now, what does the future hold for us post Article 50?
Well, post Article 50 will be in 2019. So politically, it's impossible to tell, because so much of the current political debate has been characterised by where people stand on Brexit, which has been great for the Liberal Democrats in Remain places, and great for UKIP in Leave places, and basically fine for the Tories and basically horrible for Labour. But there's no way of knowing how that's going to shake out, though I think I would not be alone in expecting that after a 2020 general election, we have another Conservative Prime Minister, or the same Conservative Prime Minister. Either way, the Conservatives will win the 2020 general election.
What makes you think so?
That the Labour Party can't provide a challenge, and that there isn't enough concentration of Remain voters in the right places to do anything with the Liberal Democrats. There's no scope for anyone to effectively challenge.
No one would have expected that Donald Trump will win in America.
That's true. I think Donald Trump.
I mean, everybody got it wrong. The media.
Oh no, sure.
Everybody got it wrong.
I did preface my remarks by saying that I think everything is very difficult to predict, but I think if I were to predict anything politically, it would be that the Conservative Party will be the next will be the government after 2020. Just because at the whoever it is leading that party, I don't think, in the way that our general elections work, that any of the kind of insurgent parties the Liberal Democrats or UKIP can form a government, can get enough votes to get enough members of Parliament elected to form a government, and I don't think that the Labour Party is in any kind of shape to win a general election. So the Tories will be the largest party after the general election. They may not win it outright, but they will certainly be the largest party. Anyway. That's politics. In terms of the economics,
how does that shape out, affecting or impacting on the economy with these cuts in the NHS, cuts in this, cuts in that, and people are like, okay, will they still be able to endure this kind of cuts? Now, in your own opinion, you felt like, okay, this might continue for another 5 years, 7 years.
What, the austerity stuff?
Yes, with another Tory government in power.
My feeling is, and I suspect that the position that Theresa May will adopt, because she's a very different sort of Conservative to David Cameron and George Osborne, my suspicion is that when in the run-up to and after Brexit has happened, there will be less constraint in terms of public spending. So there will be more investment in public services and things like that, not least because that's a very strategic thing to do in the run-up to a general election, which they will be in by 2019. So I think, I suppose when I say I think that the Conservatives will continue, I'm not sure austerity will continue beyond that. Though I think, and we're getting into kind of distant territory from where we started, so I'm not going to go too deep into this, but I do think that a lot of these issues, like the NHS that you mentioned, these are much bigger things than can be covered in the context of the Brexit discussion, because of the structural issues around how the NHS is organised and how it's funded and how the NHS should deal with an ageing population. So let's park the NHS, I think. In terms of the wider economy, it really depends on the deals that are done, and it depends on, I think in 2019, at the point of Brexit, there will certainly be a shock to the economy. Of what scale, it's hard to know, but there will be a dent in sterling and in the price of sterling, and there will be a consequent amount of inflation in the things that people are buying in shops. I think those are the two most obvious and short-term consequences of it.
Sam Foxman, Director, Develop Africa. Thank you for taking your time out to join us on the show today.
Thanks for having me.
We've been talking about life after Article 50 in terms of its impact on Britain's economy, and my guest in the studio has been Sam Foxman, Director, Developed Africa, an organization that talks about driving investment from across Europe to UK, and of course from UK down to Africa. If you need more information, you can check out www.developafrica.com, and then you can get more information about what Developed Africa does in terms of providing investment opportunities from the United Kingdom to Africa and from Africa to UK. So far, that's Sam Foxman. We'll take a very short break now. When we come back, I'll be discussing housing, taking advantage of the housing sector in Britain with Mayua Oluyede, CEO MS Estate, an organization fast growing and expanding in its multi-million pounds investment across Britain and high street estate agents in London. So we need to cut a break now, and we'll come back with Oluyede. Don't get away. Every Monday at 10 a.m. to 12 noon. As part of our continued efforts to reach the African and other ethnic communities in the United Kingdom with greater impacts and create the platform to hear your silent and unheard views.